In this video, I'm sharing the 4 steps I follow each and every month to create and update and maintain my bookkeeping system. These 4 steps are so important within your business because you need to know how much money you've made, where your money is going, and what the heck do you do with it? All right, let's get into it. Here's a quick snapshot of the 4 steps. Record, reconcile, report, and review. Now let's get into step 1, which is record. Now I hate to say that this step may be the most important because it is step 1, but it is the most important. That will determine all of your reporting, all of your decisions. If you have accurate numbers, it will make life so much easier for you. So what does it actually mean to record? It means recording your transactions. Now there are a couple of different ways to do this within your QuickBooks Online. You can link your bank accounts, your savings accounts, credit card statement, even your PayPal account to have bank feeds where QuickBooks is going to automatically pull in all of your transactions. This is actually my recommended way and my favorite way because it saves you time. Another option is to manually add each transaction, which can be time consuming and can also result in a little bit of human error if you're not careful. But it is a possibility. So you need to record all of your transactions. Recording also means creating your invoices, your sales receipts, and your expenses. So you need to enter in every time you need to send an invoice to a client or a customer. If you're collecting money from a client or customer, that would be a sales receipt. And if you have a bill to pay, then you need to enter that into your QuickBooks. What helps with this is, especially if you have the bank feed option turned on, is when you have an invoice, an outstanding invoice, and that customer has paid you and you deposit those funds, QuickBooks is going to say, hey, this deposit is the exact amount for this invoice, and it will match it together for you to show that it is a paid invoice. In this step, we also want to include any other outside payment processors, Stripe, PayPal, Square, anything else that we have connected to collect funds or money from our customers or clients. Step 2 is to reconcile. Reconciling simply means matching your transactions with what has actually occurred within your bank account, on your credit card statement, or within your PayPal activity. In this step, you're going to verify your transactions. So you're going to have your bank statement, you're going to enter in the ending balance and the ending date for a specific time period, and then you're going to go through your transactions in QuickBooks Online and you're going to clear them, you're going to match them. So that way your bank balance matches what your QuickBooks Online register says. This is a good time to figure out if maybe you're missing any transactions or maybe there's a duplicate transaction that's been entered so that you can get that corrected. Step 3 is to report. Now while step 1 is probably the most important, step 3 is probably my most favorite because it tells you how you're doing as a business. It shows you the progress you've made over the past month or 3 months or a specific period of time. So you're going to run your monthly reports, and the 4 reports you need to run are your profit and loss statement, your balance sheet, your cash flow statement, and also your aging accounts receivable. These reports are what you need to understand how your business is performing. Now the aging accounts receivable is even going to show you all the number of open invoices and how much uncollected funds you have sitting out there waiting for clients to pay you. Step 4 is to review. This is the final step. And it's important because it's going to make sure that your information is accurate. So when you reconcile and you notice a duplicate transaction, you need to take care of that. Or maybe if you've noticed that a transaction hasn't been entered correctly, or maybe you need to change the payee name to the correct because what pulled in through the bank isn't exactly right. These are the times for you to take care of those to get them to be accurate. It also means that you need to double check your coding when you review your profit and loss or your balance sheet. If something looks a little off, maybe one expense category seems a little bit too high, you can review those transactions to make sure that everything was coded to the right account. It's also the perfect time to review any undeposited funds to see where they're at and why they haven't been deposited yet. And there you have it. Those are the 4 steps in your bookkeeping checklist to make sure that each month you end on a high note and start the new month off on the right foot. Let me know, comment below, what is one report that you love seeing each month that really tells you and gauges you in on how you're doing it as a business owner.